All right, welcome back for the episode of Carnivore Trades. Today is Friday, September 1st, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today here. So first day of the month and right before a holiday here. I believe I talked about this yesterday. I know members, we talked about this yesterday and in the morning. But there may have, talked about a possible stick at 4,500. Don't bet against those Gamma boys. So we gapped up today right into this gap window right there. And bears defending the island a little bit, right? There was a pretty good Gamma stick at 4,500. RSI a little overbought, started to diverge into that gap up on the jobs number, and we did pull back in a little bit here. So markets are still positive on the day. Let's not make a whole lot out of it. Again, we're in float mode here, like total float mode, holiday mode. 41 million shares at 330. That is absolutely holiday volume. And I said this at the beginning of the week. We may be neutral to up. The big boys are in the Hamptons, right? They're not trading this. So, but market's on autopilot, and that Gamma stick did play out pretty well. You can see here on the SPX, we did hit that level. We did come in and low of the day, 45.01 exactly, and now we're getting a little bit of a bounce as we get closer to the end of the day. One of the areas of concern I had yesterday, actually an area of strength today, KRE up 2.25. So nice move there. Still got a weak pattern here on JP Morgan and on these other big money center banks. Bank of America up 1%, still a weak pattern. I do not like these charts, but today, see the KBE getting a pop there as well, and broker dealer is also getting a pop. Got to our 510 level. But either way, markets here are holding up. Tech coming in a little bit. Broadcom reporting yesterday. That stock got whacked down 5%, taking down NVIDIA with it a little bit, down 1.5. AMD holding up okay, though, up 3%. So big move there for AMD. But what's going on right now? Jobs number came in, and we added a little bit more than expected. But the market gapped up. Why? Because the unemployment rate went up, which is right. Bad news is good news, right? But the algos are not always the smartest, and they just look at the headline number and say, the unemployment rate went up by. But you have to look at the labor force participation rate. That went up a lot. The speculation is now that a lot of pandemic workers, let's say content creators, basement stock traders, unprofessional stock traders, starting to come back into the workforce. Maybe they did not do so well running through pandemic savings as well. So the participation rate increasing, and that increases the unemployment rate, even though we added jobs, right? So you kind of see a little bit of a gap and crap, right? So bottom line, though, I'm seeing some divergences here, and under the hood, it looks a little interesting. So, all right, bad news is good news, right? So the dollar must have gotten crushed today because we had bad news, and that means that we're going to, the market's pricing in a, Fed pause or whatever. Wrong. Dollar index ripping higher today, up 61 basis points, closing green on the week. So we have an inside hammer here, a green inside hammer on the weekly, and there is nothing wrong with this. You pulled back all the way to the 20 MA, you tested last week's low and closed all the way back up at the highs. This could still do some backing and filling. I can't rule it out, but this is strong, and this is why I said when we closed above this area, like I said, the dollar's going to squeeze. Then we closed above this area, and I said, well, dollar's going to squeeze again, might have to pull back a little bit, but it's still going to squeeze again, and here we are at the highs. And this is despite the 2-year pulling back. Now the 2-year reversing and closing green. 5, 10, 30s, all reversing here and closing higher on the day. I thought the bad news was in the market here. I thought that the Fed was going to stop hiking because of the job market cracking. Well, yields are not telling us that. The dollar's not telling us that. What else is not telling us that? Big winner on the day. Crude up 2.6%. That is a weekly breakout. Big breakout. That is a major pivot. I've been talking about this for probably about 8 or 9 months now. This 82.72, which we did close above a few weeks ago. Then I said recently 83.53. You got to close above that. Looks like a breakout to me. So crude holding up really well. Now, seasonally, this does come in after Labor Day, but you can't deny that pattern there on the weekly. That is a breakout. So again, doesn't mean we can't pull back, but guess what? Next stop is in the low 90s, mid 90s here on crude. Doesn't mean it won't pull back a little bit, but that's a weekly breakout. XLE, been talking about this pattern here. Inside bar, nothing wrong, right? Weekly consolidation. I didn't think it was going to get ready to go this quickly. I thought we'd have to bake in the oven a little bit longer. But again, energy holding up. So again, the whole premise here is that the Fed stopped. The Fed's going to pivot. The Fed's going to do this. The Fed's going to do that. I don't know. 10 years saying no. Dollar is saying no. Crude is saying no. So in any case, oh, by the way, this is the highest weekly close this year for crude too. So factor that into your CPI next month. In any case, markets here. Bottom line, bears defending the gap window there, and we came back in. Let's not make too much else out of it. Very light volume. I think we could see some more selling pressure, some more volume and volatility coming to the market after Labor Day. Again, I talked about this. The market would probably float higher, neutral to higher for Labor Day week, right? It's how it works. But when the big boys come back, you see more volume, and that is a little bit better for bears. When the volume is heavier. So again, just something to watch. Qs, 380 level defended, so a little gap, minor gap and crap, not like crazy here. But again, 380 level is defended. We got above that gap window, and now we're closing down. So again, it's pretty, par for the course there. This probably needs to go back and retest 370, the spiders. I'd say probably, 444, it needs to be retested. And I talked about this yesterday and the day before too. What I don't like about this rally is you didn't build any support on the way up. So if we lose this pivot at any time, there's really not any support until this area, and then really like 443, 50, 444. So I do think the market goes down and tests those areas. If those areas go down, then we can get a little bit more interested in some more downside. But for right now, let's not make too much out of it. Going into a 3-day weekend, so markets are hanging in there. Russell 2000 getting a nice bid. This is strong here today. Again, KRE is up. Russell's going to be up. Up 1.16, getting back above those moving averages. This is holding up well. And I'll say the Russell, impressive there. Closing right near that 100-week moving average. Still not a great pattern here on the bigger time frames. But we did get back above the 50, and we filled these gaps here. We finally filled those gaps up there. So Russell getting a nice bid. Again, a lot of this is tied to the KRE. Dow here, inside day, nothing terrible. Engulfing reversal yesterday, but we did test the lows today and then came off of them. So again, it's hanging in there okay. If this flags here, this can go higher. So Dow hanging in there okay, and we'll leave it at that. Semiconductors here. Doing this video a little early here because we're just going to go sideways for the rest of the day. But I will say, we can watch this into the close. 156.59 is that red bar high. And we're still below that right now. We'll see if they pump it up a little bit before the end of the day. But, it's interesting to see that the bears are holding that. So a little bit of a minor kind of red flag. Again, Avgo bringing semis down a little bit here. NVIDIA as well in sympathy. But AMD holding up okay. You got Intel up nicely. TXN, TSM's flat to lower. But Broadcom, not a really good earnings report. Kind of signaling that chip demand is not that good, which kind of plays more into the NVIDIA fraud case than ever. But in any case here, semiconductors, that's the big level to watch. If we get through that, then we can go to 160. Cloud software, another green day here. This does need to pull back. I think it needs to test 350 there. But a nice week there for IGV. It really got, outside move again into it. CRM and CrowdStrike kind of saving this setup here with those earnings releases. But cloud software definitely had a nice week there. Look for 350 on a back test. Transports here, still daily chart bear flag. The longer that sits in the oven there, the more pressure that can push to the downside. So I think 15,250 will be a little bit of support, but the longer you flag there, the weaker this gets and the more likely it goes to 15. So transport's definitely on the weaker side, could be talking to us a little bit here. But again, still a weak pattern there. We talked about rates already, but you can see the ZT there coming back in. TNX, no problems. 30-year, no problems right now. Again, so rates still holding up. XHB of course, it's higher. Let's not go into it. ITB, of course, that's higher as well. Getting to that 87 handle yard to some daily chart resistance right now. VNQ here up 13 cents. Nothing terrible. If this flags here, it can go higher and test 84. If it rolls over, you can try for the higher low. But if you get through this, then it's down to 78. XLF, again, getting saved a lot by Berkshire here again. So Berkshire kind of near the highs there, but JPM having a decent day, and that is helping out. But again, banks here individually, not really good. I don't like that pattern. I don't like that pattern. I don't like that pattern, and I really don't like that pattern there on Citigroup. So again, money center banks in trouble. Goldman, I don't love that either, and I don't love Morgan Stanley. So XLF hanging in there for now. Went up there, basically got close to that gap. It's a little bit better shape. A lot of that has to do with Berkshire, though. So just be aware of that. KRE having a decent day, stalling out at the 20. Not KB, KBE having a decent day, getting above the 20. That should have some resistance at 40, and then at the gap fill at 40.60. Broker dealers we already talked about. Again, 510. That's the level I talked about earlier this week. We're there now. Might need to stall out there a little bit. Crude I already talked about as well, but what can you say? Great pattern. Pullback. I thought we would have to do a little bit more of this, but it's pushing up, so it looks really good. Again, doesn't mean it can't pull back, but eventually this is going into the low to mid 90s. XLE, I don't see any reason why this can't get up to 93. Yeah, looks fine there. You do have a weekly level right there, red bar high. Never closed above that, so 91.56, but you did consolidate for two weeks though, so this can overshoot that a little bit. And I would say 93 is definitely more of a concrete level right now. XOP, it just won't go down, right? Gap and go. It's going to close above this red bar. So next level is 160 on the weekly, and you go through that, it's up to double top. So energy really strong. Where's OIH going? 370. You guys know that. Nat gas inside day. Up move inside, kind of like how we did here. 1-2 down. We'll see if we reverse that and head towards that 3 handle. Energy looking good. We already talked about the dollar, but again, it's really strong. So respect it. Gold here holding up okay, considering you had rates reverse and go green, and you had the dollar strong. Gold holding up, impressive. If this flags here, again, it can go to 2,000. So maybe there's a risk off undertone going on right now. Could just be the holiday period stuff, but gold hanging in there okay. 2,000 could get there. Silver coming back in. Maybe this is talking about recession more so. Down 1%, should fill that gap. Let's use the SLV here. So you can see without that contract gap, it did reverse that whole gain from the 29th. But silver here, coming back in. If it comes down, it's going to 21. If you can shape up and flag, then we'll talk about it there. But it did come in today. Platinum finally came back in. So I talked about 990, that finally held. I think this may want 940 here in the short term. There's a little support at 960, but I think these moving averages down here around 935, 940 are the better level right now. But it's coming in, and again, we'll just continue to watch it. Palladium, no updates. Copper, big outside move, and then came all the way back in. Where did I tell you it would go to? 390. Where did we go to? 390.85. Came back in there. It's holding up okay, though. Bitcoin can't get out of its own way here. So it had a nice bid the other day, outside bid, and then we faded the whole thing. So right in the double bottom. I don't trust anything in this market right now. The liquidity is not good. And this pivot's getting more and more minor. We break this, we're going down to 21.5. If we go down there in a straight line, that would be very attractive as a buy, but I'm not touching anything in the crypto market right now. It's just, the liquidity is too low, and I've seen too many fake outs over the last couple of months to trust any move. So keep it simple there. But Bitcoin in rough shape here this week. Again, lastly to wrap up, spiders here, just in float mode. Bottom line, this is your resistance level. If we pull back off of that, I think we go to 444, 445, bare minimum. Qs 370. and then we'll continue to watch from there and see how the markets react, and then we'll make our next move off of that. So anyways, guys, going to wrap it up here. You guys have a great holiday weekend. Stay safe. I will talk to you guys all next week.